If you receive Social Security, SSI, or SSDI right now, take a second and focus, because what we're about to cover could affect something very basic, when you can actually get to your money. A new bank-related change is being rolled out quietly across the United States, and many seniors have no idea it may influence the timing, and in some cases the access, of their monthly deposits. This is not a small detail. This is the income people rely on for groceries, prescriptions, rent, and everyday bills. This is not a guess, and it's not political chatter. People who work in banking and retirement finance are already calling this one of the most important recent shifts in how benefit deposits interact with personal bank accounts. So it raises some very real questions. Could your direct deposit be delayed without any real warning? Could your bank put temporary limits on your account? Could new identity check requirements block you from using your own funds until you complete certain steps? Those are not dramatic what ifs. These situations are already happening to some account holders, and that's exactly what we're going to explain clearly today. I'll walk through it step by step in plain language. No complicated banking buzzwords, no confusing government phrasing, just straightforward explanations so you know what's going on and what you can do to stay protected. And if this helps you, sharing it with someone who depends on these benefits could genuinely save them a lot of stress. Before we get into the details, let me explain why this matters so much. Over the last several months, many seniors have said they feel confused and uneasy about changes they're hearing in the financial system. When the rules around banks and benefit deposits start shifting, it can feel overwhelming, especially when nobody explains it in a simple way. So let's slow it down and walk through it together carefully. To understand what's changing, we have to start with how things worked before. For many years, the US banking system operated with consumer protections meant to protect everyday account holders, including retirees living on fixed income. Many of those protections grew out of earlier financial crises, bank failures, and cases where people suddenly couldn't reach their own funds. For most benefit recipients, the process felt steady. Deposits arrived when expected, went into the right account, and were available without disruption. That reliability created peace of mind, but now the system is shifting. Behind the scenes, federal regulators, agencies like the Federal Deposit Insurance Corporation, the Consumer Financial Protection Bureau, and the Office of the Comptroller of the Currency have been looking closely at how banks process deposits, especially government benefit deposits. These conversations usually don't become big news stories. They show up in regulatory guidance, policy reviews, and internal bank procedures. But eventually, those decisions show up in real life inside your account. So what is actually changing? In simple terms, banks are tightening fraud controls and stepping up identity and account verification. Identity theft, fraudulent benefit claims, and unauthorized accounts trying to intercept deposits have increased, and regulators want stronger controls to reduce that. The purpose makes sense. Fraud is real. The concern is how the new controls can affect legitimate customers. In practice, banks now carry more pressure to monitor accounts and verify who the customer is. If something looks unusual, your deposit pattern, the way the account is being used, incomplete profile information, or activity that doesn't match past behavior, the bank may act. That action can include a temporary hold on a deposit, restricted access to parts of the account, or a demand for extra verification before releasing funds. If you have several income sources, you may be able to ride out a delay. But if you mainly live on Social Security, even a short delay of a few days can cause real problems. Rent can be missed, medication purchases can be postponed, utilities can fall behind fast. Another piece is the expansion of Know Your Customer requirements. These rules require banks to confirm customer identity and ensure accounts are being used appropriately. For people who use online banking daily and watch alerts, these updates might feel routine. But for many seniors, especially those who don't check email often or don't use apps. Verification requests can be easy to miss, and if they're missed, that can lead to restrictions. Here's a realistic example. Picture someone who has used the same bank for decades. Their social security deposit hits the same account every month without fail. Then the bank sends a message saying they must confirm identity as part of an update. The person never sees it. Weeks later, the account is flagged for review. The next deposit arrives, but access is limited until the person shows identification at a branch or completes verification steps. Eventually, it gets fixed, but not before stress, delays, and possible financial consequences. Variations of that are already happening. Now, a lot of people assume there are protections that prevent banks from interfering with benefit money. And in one sense, yes, federal law does protect Social Security and certain federal benefits from being garnished in many debt situations, meaning most creditors can't simply seize those funds. But here's the key difference: that protection relates to debt collection, not internal bank compliance and fraud checks. When a bank places a temporary hold for identity verification or fraud prevention, it's operating under a different set of rules. So restrictions can still occur while the bank reviews the situation. That distinction is extremely important to understand. It's also important to think about how this affects different groups. If you receive SSI, delays can be especially damaging because SSI is designed for people with very limited income and resources. Even brief interruptions can become an immediate emergency. For SSDI recipients, there can be added barriers too. Health conditions may make it harder to respond quickly, navigate phone systems, or travel to a branch for verification. So what can you do? Let's go through practical steps. First, confirm your bank has your current contact information, phone number, mailing address, and email if you use one. Many verification requests are triggered automatically, and outdated contact details can mean you never receive them. Second, talk to your bank directly. Ask how they handle government benefit deposits, what triggers an account review, and what steps are required if a hold happens. Write down what they tell you so you're not scrambling later. Third, if you can, keep a small backup amount in a separate account. Even a small cushion can buy time if your main account is restricted for a short period. Fourth, keep key phone numbers handy, including your bank and the Social Security Administration, so you can move quickly if something happens. Fifth, if you have someone you trust, consider letting them help you communicate if you ever need support handling calls, messages, or paperwork. Now let's address scams, because confusion creates opportunities for criminals. When people hear new rules and verification, scammers jump in. They may call pretending to be a bank or a government office and ask for personal information. Be careful. Legitimate institutions don't randomly call demanding sensitive details like your social security number or full banking information. If you get a suspicious call, hang up and contact your bank using the official number you already have, not a number the caller gives you. There are also groups that support seniors with guidance, including AARP and the National Council on Aging. And if you believe a bank handled your situation unfairly, you can submit a complaint to the Consumer Financial Protection Bureau, which tracks and reviews consumer issues. One reassurance before we finish: these banking procedure changes do not decide how much Social Security, SSI, or SSDI you are entitled to. Benefit amounts are set by federal programs, not by your bank. What can be affected is access and timing, which is exactly why awareness matters. If you help a parent, spouse, or relative with finances, now is a good time to go over these steps with them. As we wrap up, remember this: yes, the system is getting more complicated. Yes, policies are changing. But staying informed and taking a few simple precautions can protect you from bigger disruptions later. Don't panic, but don't dismiss it either. Stay organized, stay alert, and take small steps now so you don't face larger problems later. And if this helped, share it with someone who might need it, because when it comes to financial security, information is one of the strongest tools you have.